Investment and economic development are closely linked. The growth of the economy has a significant impact on investment decisions, and investment in turn drives economic development. However, investment decisions require consideration of more than just economic growth. In real life, investors must also consider various factors such as inflation, war, natural disasters, and economic recession. These factors can have a significant impact on investment returns, leading to increased risk and unpredictable returns. To manage these risks, investors need to adopt multiple strategies. The long-term value investing approach is an effective strategy that requires investors to identify companies that can thrive and generate profits through various economic conditions. By holding stocks or bonds of these companies, investors can obtain stable returns. Additionally, a reasonable diversification of investment holdings is another way to reduce risk. Investors can diversify their funds into different investment targets, such as stock indices, commodities, gold, etc., to prepare for various situations. Exploring the patterns of fluctuation in various investment products is a crucial part of investing. In the past, technical analysts used to study market trends and price fluctuations to predict market movements. Now, with the advances in financial technology, many investors are turning to quantitative investing, using complex mathematical models and computer technology to predict market developments. In terms of investment allocation, we recommend a diversified investment portfolio that involves a reasonable allocation across various investment targets with comprehensive risk control measures. The investment target should not be less than 10% and can be adjusted based on our rough assessment of the future economy. For instance, if the likelihood of war is higher, the allocation to oil can be moderately increased. If the risk of natural disasters is higher, the allocation to soybean meal can be correspondingly increased. If the risk of inflation is higher, the allocation to gold can be relatively increased. If you are a beginning investor, you can allocate your desired investment or financial management funds as follows: 40% in the Nasdaq, 25% in soybean meal, 20% in oil, and 15% in gold. If you have an uncertain attitude towards the future economic development, allocate funds as follows: 25% in the Nasdaq, 25% in soybean meal, 25% in gold, and 25% in oil, and perform a balanced reallocation on the first day of each year. If you have extensive experience with trend analysis and technical indicators, you can adjust the allocation of each commodity within a range of 20% during the process, by increasing your holdings in strong performers and reducing holdings in weak performers. However, if you choose to adjust your positions based on trends, keep in mind your starting positions at the beginning of the year. At the end of the year, compare your performance to a fixed allocation of positions. If you find that your ability to identify trends is not as strong as you had hoped, return to a fixed allocation of funds across the various categories. At the end of the video, I want to explain why we still have a positive view on the Nasdaq index. We believe that the strong performance of technology and innovation-related companies, as well as the overall economic growth, will continue to drive the index higher. Moreover, we currently don't believe that a U.S. economic recession will come soon. During the pandemic, governments around the world gave money directly to their citizens, which has been more effective in promoting economic growth than raising and lowering interest rates. Therefore, to some extent, the U.S. stock market is still relatively safe at present. In summary, investing is closely connected to the economy, and investors need to consider various factors comprehensively and adopt reasonable strategies in order to obtain stable returns. On the road of investing, as long as you continue to explore, learn, and manage risks, you will inevitably achieve better and more stable returns. In the process of investing, our views on the economy become more comprehensive. If you have any questions related to investing and economics, you can leave a message, and we will prioritize addressing the questions of more people. If you are interested in topics such as the development trends of economic bodies, such as the possibility of a U.S. economic recession before it arrives, please click on the video later in this series.